let's start by looking at the fundamentals. Looked at the calendar, and it seems this coming week there isn't much fundamentals to influence some price action. So we'll start from 6th of August to 12th of August. Okay, so no news on Monday and Tuesday, no major news on Monday and Tuesday. And on Wednesday, we have New Zealand and CPI from Yuan, that's from China. Then on Thursday, we have USD. So Thursday will be very volatile. There are several major news coming from the United States. CPI, that's Consumer Price Index. Then we have core CPI. Then we have unemployment claims. Okay, I believe you know how to trade these data. Okay, all you need to look out for is the actual value. That's what we're waiting for. You can see that the previous value and the forecast value has been given. So what we're waiting for now is the actual value. If the actual value is higher than the forecast, that will be positive for the currency. And if the actual value is less than the forecast, that will be negative for the USD. I hope that is clear. Then on Friday, there are major news coming from Great Britain and United States. Okay, so that's it for fundamentals. Monday, Tuesday, no major news will be released. Okay. So let's go to the charts. So the first pair I'll be looking at, or we would be looking at, is GBP USD. You could see I've done my analysis. I'm set for the new week. You can see I'm set. You can see my entry levels for sell. Okay, done my analysis. I did it last night. So I'm not going to be using this my charts. I have to open new charts. Okay, so let's start with GBP USD. Some of you would wait for the market to open before you do your analysis, which is very wrong. It is very wrong. Weekends are supposed to be for back testing and market analysis. Back testing and market analysis. Let's start with GBP USD. So we're going to start with the monthly time frame. Okay, we'll start with the monthly time frame. The candle for the month just opened, right, a few days ago. So we need to see the candlestick formation that we had last month. Okay, we'd also use that to predict what is likely going to happen this month. Okay, so let's start with the monthly. So you could see that last month's candle on GU closed as this is a shooting star. Okay, it closed as a shooting star, which indicates change in trend from bullish to bearish. Okay, so that's what we have on the monthly chart. Let's go down to daily. Sorry, weekly. Before we go down to daily, let's see what we have on the weekly. Okay, so you can see what we have on the weekly. Can you see what we have? Monthly is indicating change in trend. But when you go down to the weekly, last week candle is indicating change in trend also from bearish, excuse me. So what we have here is an hammer, right? Which indicates change in trend from bearish to bullish. So we have a bearish setup on monthly, and we have a bullish setup on weekly. So which would play out first? The weekly time frame. The trend on the weekly time frame will play out before the monthly time frame. So this week, I would be looking out for buy opportunities on GBP USD. I will be buying GBP USD. Now, what are the things I consider on this weekly time frame? Now, the first thing I look out for is the candlestick formation. Okay. Now, this is AMA indicating change in trend. The next thing I would look out for is a support. Is the AMA sitting on a support, or as the AMA tested a previous support level? As you can see, the AMA tested, you can see previous supports. You can see it here, previous resistance, turn support. And at this level also, it has tested this support level. Can you see that? So that's the reason I am looking for, or I would be looking for buy opportunities on GBP USD. Now let's go down to daily time frame. Now on daily time frame, I want to ensure that a candle has closed above a resistance level on daily time frame. That is why I'm switching down to daily time frame. As you know, this weekly candle is a bearish AMA. And for me to execute trade, if I have to go by just the weekly time frame, I would have to wait for this coming week candle to close bullish before I buy. Right? You don't execute a buy trade after the close of a bearish AMA. Before you execute a buy trade, the next candle must close bullish. It means that for this coming week, I wouldn't trade GBP USD if I'm just focused on the weekly time frame. I would not trade GBP USD until next week candlestick closes. If the candlestick closes bullish, then I'll look for buy opportunities the upper week. Are you following? So I need to go down to daily to confirm that a candle is trading above a resistance or daily time frame. Also on daily time frame, we should have candlestick formations indicating change in trend. It could be AMA, it could be engulfing candle, it could be double bottom pattern. Okay, so let's go down to daily. So you can see what we have on daily. So Thursday candle already confirmed change in trend, indicates that the trend is about to change from bearish to bullish. This is a doji. Can you see that? And after the close of the doji, you have to wait for the next candle to close bullish. So on the daily time frame, it is confirmed that we have buyers in the market. It's the right time to buy. We already have the setup on the daily time frame. Okay, so on the daily also, if you go back, you would see that we had this support here too. You can see. So that is the reason for this rejection. Can you see that? So the next thing we need to identify now is our entry level. Okay, that's the next thing we need to identify. At what price should we get into the trade? Should we jump in when the market opens? Yes, you can jump in when the market opens. For your stop loss, if you're entering the trade at the open of the market, your stop loss should be the low of this candle. So what is the risk involved? If you have to set a stop loss at that level, is about 131 pips. 131 pips, because it's not confirmed now for us to buy based on last Friday candlestick formation. Okay, so if you are entering a buy, your stop loss will be at this level, which is like 130 pips. And if you are risking 130 pips, your target should be, minimum should be 200 pips. So if you enter from this point, the profit target should be around this level. Yeah, that will be the next resistance. Your target, your TP should be at this level. So let's calculate the risk. Okay, we've already calculated the risk to be 130. And the reward should be at least 200 pips. So your TP should be at this resistance level. Okay, now at what level or at what price should we enter buy? Okay. This is GBP USD. We're looking at GBP USD. You can see it on the screen. This is it, GBP USD. Okay. So let's go to 4 hour. you can see on 4 hour. What formation do we have 4 hour? This is a bearish setup, right? This is a bearish setup on 4 hour. Okay, so this is a bearish setup. Why is this a bearish setup? We have what we call double top. This is a double top. This is a double top. Can you see that? And at this point, we had a support here. So this is a supply zone, or you could call it resistance zone. Okay, so this is a zone. So the formation we have on 4 hour and 1 hour and 15 minutes contradicts the formation we have on the weekly and daily. Is that clear? The formation we have on the weekly and daily is different from what we have on 4 hour, 1 hour. 4 hour, 1 hour says it's time to sell. Weekly, daily says it is time to buy. So which of these time frames would you go with? The weekly and the daily time frame. So for you to execute a buy trade on 4 hour and 1 hour, you need to ensure that these time frames align with the higher time frame trend, which is bullish. So for you to buy, you would have to wait for a candle to close above this supply level. That is when the lower time frames would align with the higher time frames. And that will be the best time for us to buy. If you jump in and buy now, it's at a higher risk. Is at a higher risk because this 4 hour formation is likely going to play out. It's likely going to play out, but it might not break the low of the daily and the weekly candle. That's why I said if you are buying from the current market price, your stop loss should be the low of the weekly or daily candle. Okay, price is likely going to pull back. It's likely going to pull back to this support, but it won't get to this low. Okay, so, but if a candlestick closes above this level before you buy, your stop loss will be as low as 50 pips. So if a candle closes above this level, your stop loss could be at this, still very high. Let's say, set it at this level, 100 pips, which is still okay. Okay, 100 pips. Then your TP should be around 150 minimum to 200 pips. So my bias on GBP USD this week is bullish. Okay, and as you know, USD is negatively correlated with the dollar index, DXY. Okay, and dollar index is bearish at the moment. So if dollar index DXY is bearish, you expect USD to lose value. USD will lose value. Okay, USD will lose value. So if USD is going to lose value, then you should expect pairs that has USD as counter to be bullish this coming week. I hope that is clear. Okay, so that is it for GBP USD. We spent so much time on GBP. Let's move to the next pair, Euro USD. As you know, GBP USD is positively correlated with Euro USD. 80% of the time, these pairs would move in the same direction. Okay, as you can see, this is 4 hour. If you look at the GBP USD charts, you will see that the formation we have on the Euro USD is similar to what we have on GBP USD. That tells you that both pairs are positively correlated. The same way we had a resistance, a double top on 4 hour, you can see we had it on Euro USD too. Can you see that? You go to the monthly, let's see what we had in the monthly. Okay. So this is what we had on the monthly time frame. Last month was shooting star. Same thing we had on GBP USD, you can see. So let's go down to weekly. You can see this is, should we call this a spanning bottom or armor, whatever name you want to call it. Armor, spanning bottom, both indicate change in trend from bearish to bullish. So there's only arguing if it is armor or spanning bottom. Both candlestick formation are bullish reversal candlestick formation. So the next thing we need to confirm, is it sitting on a support? Yes, you can see. Tested the support, and there was a strong rejection from this demand zone. You can call it the support zone. You can call it demand zone. So there was a strong rejection from this demand zone, which indicates that the demand for euro is increasing. The demand for euro is increasing and its supply is dropping. And when the demand exceeds supply, price is expected to go up. Okay, so let's go down to daily. So what are we going to confirm on the daily? We want to be sure that a candle has traded above a resistance on daily time frame. Also on daily time frame, we should have bullish reversal candlestick formation on daily time frame. Okay, so let's go down to daily. So you can see we had what looks like an armor or a spanning bottom, which is a bullish spanning bottom. Okay, and the next candle also closed strongly bullish, which indicates change in trend. Okay, so this week, the coming week, I would be looking for buy setups on Euro USD. So we're switching down to 4 hour to identify resistance level or supply level on 4 hour time frame. But before we move down to 4 hour, we could identify this resistance level, okay, on daily. Before we move down to 4 hour, let's identify this resistance. Okay, so let's go down to 4 hour. Okay, so you can see resistance on 4. Okay, we did that before we moved up to weekly and monthly time frame. Okay, so if you're considering buying, you should wait for a candlestick. 4 hour candle, preferably, should close above this resistance level before you buy. 4 hour should close above this resistance level before you consider buying. So we could see price, since we have a bearish formation on 4 hour time frame, it's likely we'll see price pull back to support levels. It will pull back to this support. It will pull back to this support. Okay, so I think this support is more stronger than this support. You know why? Why this is more valid? This level, this support is more important than this support. You know why? This level has been tested more than 2 times. Can you see it? This is a key level. So the support here, so the support here, resistance turn, support. So there's a high probability that price is likely going to pull back to this zone, this support zone. Okay, so you can decide to buy from the current market price. And since you know that there's a possibility for price to pull back to this zone, then your stop loss has to be below this zone. This will be the best level to use as your stop loss if you want to execute a buy at the open of the market, okay, or at the current market price. Your stop loss will be at this level. Now, when the candle closes above this level, you can now adjust your stop loss from this point, okay, to maybe few pips below this bullish candle. I hope you're getting me, okay? But if you want to risk it, if you want to take the high risk, your stop loss should be at this level initially. Because if you set it at this zone, around this zone, or above this zone, there's a high probability they will hunt for it before price starts moving in your direction. So the wise thing to do is to set it here. When they are done with their manipulation and stop loss hunting, you can now reduce your risk on the trade from maybe 100 that it was to maybe 50 or 70 pips. But you should wait for them to hunt for stop losses or manipulate prices before you adjust your stop loss. Okay, so that's it on Euro USD. So you could also, to know where price is likely going to pull back to, how far price will go, you could use the Fibonacci tool. Just apply the Fibonacci, take it from the swing high to swing low. Okay. So it is expected that price pulls back to at least level 50. At least price should pull back to level 50, level 61.8 or 79.00. These are the levels you should use as your TP, your take profit. Your TP1 could be at 61.8. Your take profit 2 can be at 79.00. Okay, to be at 79.00. I think this 79.00 is a key level, okay, because we have a fair value gap. Okay, this is a fair value gap. So I prefer setting my TP around this zone, either this level or this level. Okay, so that's my take on Euro USD. Wait for a candle to close above this zone before you buy. If you're not willing to take high risk, the risk of that's about 200 and something pips, wait for a candle to close above this level. If a candle closes above this level, you can use as low as 50 or 70 pips as your stop loss. Okay. The next pair is which other pair? Australian dollar USD. As you know, I don't need to analyze Australian dollar USD. You can do that on your own. Go to the charts and analyze Australian dollar USD. As you know, it is positively correlated with GBP USD and Euro USD. If you are buying GBP USD and Euro USD, then you should look for buy setup on Australian dollar USD. If you go to the chart, you will see that the formation we have on Australian dollar USD is also similar to what we have on GBP USD and Euro USD. Let's just see the charts. Okay. You can see we had something similar to what we have. Should be a double top. Okay, this is 1 hour. Let's switch to 4 hour. So you can see this is also a double top. Okay, you can see same formation. Can you see that? So if you want to buy, there has to be a breakout from this supply zone. You have to wait for a candle. Preferably the 4 hour candle should close above the zone before you buy. But if you want to execute a buy from the current market price, set your stop loss few pips below the low of this candle. If you can wait for a candle to close above this level, your stop loss should be between 50 and 70 pips. So take a buy from here. Okay, the risk here will be about let's say 70 pips, which is still okay. Okay, 70 pips. But you can also wait for a candle to close above this level. Okay, that will confirm the bullish trend. Okay, this will be the best price above this zone. Will be the best time to execute a buy trade. Execute or apply Fibonacci to know where best to set your take profit. You can take it from this swing high to swing low. Price is expected to pull back to at least level 50. Okay, 61.8 or 79.0. So let's look at USD CHF and USD CAD. If there's any pair you want us to analyze, any instruments, please drop it in the comments. Euro USD is negatively correlated with Euro USD. USD CHF, I mean, is negatively correlated with Euro USD. 90 to 95% of the time, these pairs move in opposite direction. So if USD CHF is negatively correlated with Euro USD, it means that it is negatively correlated with GBP USD, Australian dollar USD, and New Zealand USD. Okay, so as you know, on USD, CHF, USD is the base. USD is the base. On GBP USD, Euro USD, New Zealand USD, and Australian dollar USD, USD is the counter. Okay, so you can see what we have on. Let's start with the weekly, or let's see the monthly chart. Let's start with the monthly chart. So on the monthly, there was a breakout from this support. Last month candle closed below this support. And you will see that this current month candle, I think, almost tested this previous resistance, support stone resistance. Go back here, we had a support to here. So I think it has tested, okay, you can see, it has tested this previous resistance level, support stone resistance level. This is a supply zone, okay? The market has tested this zone. So let's go down to weekly. What do we want to identify on weekly? We want to ensure that we have a candlestick formation on the weekly, indicating change in trend, and also want to confirm that the market, no, it's on daily. It's on daily, we'll confirm that the market is trading below a support level. So let's go to weekly. So you can see what we have on weekly. This looks like a shooting star, right? This is a shooting star. So we go down to daily to confirm if a candle is trading below the support. Also, the candlestick formation on the daily time frame should indicate change in trend from bullish to bearish. So let's see what we have on daily. Okay, so this is what we have on daily. Last Friday candle closed as a spanning bottom. Okay, so what we need to do here is identify. Let's go to 4 hour. Okay, so as you can see on 4 hour is trading below. You can see this was a previous support. This was a previous support. And when the market breaks a support, what is expected? Price is expected to pull back to the broken support stone resistance. So you would see the last 4 hour candle on Friday. What happened after the breakout from this demand zone? What happened? It retested. You can see it pulled back and tested that broken support stone resistance. So there's a probability that price will start dropping from this level. But before we jump in, there has to be a confirmation. It's either we wait for a 4 hour candle to close below this support. The 4 hour candle must close below this support before we execute sell. Now, it's possible that price will pull back to these levels. Okay, it is possible that price will pull back to this previous resistance level. Okay, so if that happens, this wouldn't be our entry level. Sorry, this wouldn't be our entry level if price pulls back to this resistance level. Okay, so what we need to look out for if price pulls back to this level is a candlestick formation indicating change in trend. Once we see that, we can start selling. We don't have to wait for price to break this support before we start selling. But if price starts dropping from the current market price, and the 4-hour candle closes below this level, we can sell. This will not be our entry level. But if price pulls back to this resistance, you don't have to wait for price to drop to this support level, to break this support level before you start selling. You start selling immediately you see a candlestick formation indicating change in trend. Okay, so you execute what? Sell after the formation of the bearish reversal candlestick. Okay, but if price starts dropping from this current market price, you should just wait for a 4-hour candle to close below this support, then you sell. And if you are selling, there's a high probability that this previous support will be broken. Why? There are a lot of stop losses at this level, and we also have lots of sell stop orders at this level. So there's money at this level. There's liquidity. ICT traders will call it liquidity. Okay, so they are likely going to hunt for the stop losses at this level. So your TP could be at this level. But like I've always advised, your risk should determine your reward. So if your risk on this trade is 50 pips, your reward should be around 80 to 100 pips. Don't be greedy. Your risk should determine your reward. So if your risk is 50, aim for 80, 100 pips. Don't be greedy. Don't be risking 50 and you are aiming for 300 or 400 pips. If you're aiming for 300 or 400 pips, you know that to take weeks. It could take months before the market will hit your TP. Okay, so you need to know the type of trader that you are. Are you a day trader? Are you a swing trader? Or a position trader? A position trader is the one that will be aiming for 300, 400, 500, or 1,000 pips. But if you're a day trader, your TP should be between 40 to 70 pips. If you're a day trader, your TP should be between 40 to 70 pips. If you're a swing trader, your TP should be between 80 to 150 pips or 200 pips if you're a swing trader. So it's very important that you know the type of trader that you are. Very important. Most traders don't know their personality. Okay, so that's it for USD CHF. So the last pair we'll be looking at is USD CAD. Since USD is the counter, is the base on USD CAD, just as we have it on USD CHF, then we should expect USD CAD to be bearish. Okay, so let's look at USD CAD. That'll be the last pair for tonight's session. Gold. Okay, we look at gold. Okay, we look at gold after USD CAD. So you can see what we have on USD CAD. Let's start with the monthly. You can see last month was a doji, a spinning bottom indicating change in trend. Okay, and the current month candle has tested this previous high. What played out here? Why was last month's candle spinning top? You could see that there was a breakout from this support. We had a support here, and we also had a support here. After a breakout from support, what is expected? Pull back, a retest to that support on resistance. And that was what played out last month. Most people will jump in and start buying because they see what they have here is a spinning bottom. Most will jump in and start buying. But you also need to know that there was a breakout from a support. So last month was a retest to that support, and the candle closed below that resistance. Can you see that? The candle closed below. If the candle had closed above this resistance, we could say the trend has changed, and it could also be a false breakout. So a lot of retail traders would have jumped in to buy. Yes, this past week, they might have made some good profits, but now what they have done here is to test the high of last month's candle. Reason being that there are stop losses at this level. Stop loss and buy stop orders are at this level. So they've hunted for the stop losses at this level. So what will be their next move? Sell. But most retail traders would buy. Most retail traders will jump in and buy. But the institutions would want to what? Sell. Okay, so let's go to weekly. So you can see on weekly, this previous high, can you see? And liquidity resides at old previous highs. So they've already cleared the stop losses at this level. So what will be their next move? Sell. How do we confirm that the sell move or the bearish move is about to commence? Candlestick formation. It's a candlestick formation that would confirm that the bearish move is about to start. So let's go to daily. That's what we had on daily. Okay, so on Thursday we had a spinning top, right? A lot of retail traders would have jumped in to sell. Where would they set their stop loss? The stop losses will be at this level. And we had stop losses at this level before, stop losses at this level. So I think last Friday, what they did was to clear the stop losses at these levels. Okay, so let's go down to 4 hour. So you can see what we had on 4 hour. Normally, after the formation of this candle, this shooting star, price is expected to drop. Okay, it dropped a little and did what? Went back up because they want to hunt for stop losses at this level. That's the reason for this pullback. As you can see, this candlestick closed below this support. So price is expected to just drop. Okay. But what they did was to push price back up to scare a lot of people and to also hunt for stop losses at this level. Most traders would have executed sell and not use stop loss. And probably maybe they over leverage. Most of them will be scared. They will be scared and they would have executed the trade. They would have closed the trade due to panic. Okay, so that's the reason. So if you're considering selling USD, if you go to 1 hour, you would see that there's a candlestick formation indicating change in trend. Can you see it? Can you see it? A doji has formed. 2 dojis. We have 2 dojis here. Strong confirmation that the trend is changing from bullish to bearish. But we don't just jump in, as you know. After the formation of the doji, the next candle must close bearish. We want to be sure that there are sellers. We have enough bears in the market to push the price down. We can't confirm that with a doji candle. We have to wait for the next candle to close bearish, preferably below the lows of these dojis. If a 4-hour candle closes below this demand, or you call it a support zone, that will be the best time to execute a sell on USD CAD. Is that clear? You can see on, this is on 15 minutes. So you can see we had a doji here. This candle also doji. We had a support here. So if this support is broken, that's a confirmation to sell. It's a confirmation to sell. Okay, so that'll be all. Okay, let's look at gold. After this, I'll take your questions. Gold. You can see I've done my analysis on gold. I'm expecting a bearish move, or sorry, bullish move on gold. I expect gold to pull back to this supply zone. Okay, that's my expectation for gold this coming week. I expect it to pull back to this level. Last week, I bought gold. Unfortunately, they hunted for my stop loss. They hunted for my stop loss. I think it went down 20, 30 pips below my stop loss before it started moving in my direction. Maybe NFP was released, it just pushed price down, hunted for my stop, and price started going in my direction. If I had not used stop loss, I would have made some good profit on gold. If I had not used stop loss. So things like this will happen to make you feel that using stop loss is a bad idea. Okay? These are some of the reasons some traders don't use stop losses, because most times their stop loss gets hunted. Okay? But I know that it was because of NFP. It was because of NFP. That's why I always advise, if you're a technical trader, know when major news will be released. Know when the major news will be released. When the major news is to be released, you cannot be using 20, 30 pips as your stop loss. They would hunt for that stop loss before price will move in your direction. But if you don't know when the news is released, you just set your stop loss, use 20, 30 pips. They will hunt for it. And you'll be wondering, I have a good technical setup. Why did this trade go against me? But if you are aware that a news is to be released and the market even go against you, you know that, okay, this is the reason my stop was hunted. You know that, okay, it's news. So the days that there will be no fundamentals, your technical analysis is likely going to play out. But when a major news is to be released, you don't use small stop loss, tight stop loss. This last week, because of the several major news that was released, my stop losses was as high as 50, 70 pips. Normally, I would like to use between 40 and 50 pips. But this past week, when I looked at the calendar and I saw that there were several major news to be released that week, I knew I need to increase my stop loss to 70, 80 pips. On gold, my risk was as high as 100 pips on gold because I knew that that week would be very volatile. So I can't use 20 or 30 pips or 40 pips as a stop loss. It will be very risky. Okay, so that will be all. Gold is bullish. Gold is bullish. Okay, but we could see price pull back to this support, resistance non support. Okay, it's likely price will pull back to this support before it starts going up. And it's also possible that price will just keep going up from this current market price. So since you know that there's a possibility for price to pull back to this level, you could take a buy and set your stop loss few pips, maybe below this level. But you need to be aware of the risk involved. If I buy from this level and I'm setting my stop loss, let's say around this level, because I know there's a possibility for them to push price back to this level. Setting my stop loss, let's say at this level, that's about 95 pips. If you are okay with that, you can execute a trade. Okay. You can execute maybe part of the lot size. Okay, partial entry, just take partial entry. So let's say you're trading the normal lot size you use on a trade, let's say is 1.0. You can just execute 0.03 or 0.05 on this first trade because the risk is very high. Immediately a candlestick closes above this resistance or supply zone, you could add more trades to the initial one you opened. That's how I trade. Okay, so I can decide when market opens, I will just execute buy, reduce my lot size on this first trade, wait for confirmation. Once it's confirmed, the candlestick closes above this level, I will add more lot size to the trade. I hope that is clear. So that will be all for tonight's session. I wouldn't be available tomorrow. That's why I called for this meeting. Okay, I wouldn't be available tomorrow. That's why I called for this meeting. Okay, your question, if you have question, just raise your hand up so that I can unmute you. Let me just unmute everyone, okay, so that I'll take your questions. If you have question, you can unmute yourself.
It's clear, sir. It's clear.
Hello, good evening, sir. Can you hear me, sir?
Oh, sorry, my mic was muted. Okay. You have any question? Someone was about to ask a question. If you are a Cabana client, Mr. Software, you have access to the replay. You are a funded client, so you have access to the replay. You can request for it. Probably it should be available tomorrow. Okay. The replay is only available for funded clients. Okay. Any question? No question?
Hello,
Emmanuel, you
sir.
wanted to ask a question.
Yes, sir. Sorry, even though my network was very bad, I have been in and out. The first pair you analyzed, I noticed on the weekly time frame, I haven't seen a
That's GBP
reversal. Yes, I noticed that on the weekly time frame,
Yeah.
for me the bearish candles, the two bearish candles, around the resistance area, I was thinking it was supposed to be for a sell indication. I was surprised when you said we're going to take a buy. So I don't know. Can you throw some more light on that, please?
What kind of information is this? This is the weekly.
That's the hammer, sir.
Hammer, right? What does that hammer indicate?
A reversal.
Reversal. Good. The second thing you need to check is the hammer sitting on the previous support level. Is the hammer sitting on a previous support level?
Yes, sir.
So hammer indicates change in trend, and also that hammer is sitting on a previous support level. That indicates that we have more buyers than sellers. If you are to go by the monthly setup here, this is a bearish setup. But like I said, the weekly setup would play out before the monthly setup. You use the weekly and the daily to define the direction of the market. The monthly time frame is for position traders, not for day traders or swing traders. Are you with me? So after you've confirmed that you have a bullish reversal candlestick formation on the weekly time frame and that candle is sitting at a support level, go down to daily. On a daily, we should also have a bullish reversal candlestick formation on the daily. Then on 4 hour, we need to ensure that the market is trading above a resistance level. I hope that is clear. So let's go down to daily. What do we have on daily? Now, if you want to sell, you can sell, okay? But before you sell, a candle must close below the support. A candle must close below the support. You cannot sell with this formation. This is a bullish setup. If you are considering selling, you should wait for a candlestick 4 hour preferably to close below this support. That's when you consider selling. So this is daily. What do we have here? We have hammer. This is a bearish hammer, right? This is a bearish hammer, or you call it bearish doji or bearish spinning top, okay? All these three candles information indicates change in trend. And because this body is bearish, we can't just jump in and start buying. We have to wait for the next candle to close bullish before we start buying. And last Friday candlestick closed bullish, and it closed. Another thing you need to consider is the high of this hammer or doji, whatever you want to call it. This candlestick closed above the high. This tells you that the buyers have overpowered the sellers. Exactly. This tells you that the buyers have overpowered the sellers. Now, what is the reason for this rejection on this candle? This previous, what's it called? Previous support stone resistance. That is the reason for the rejection. Can you see it? This is the reason for this rejection. That's why I said for us to buy, we have to wait for a candle to close above this level. We could also decide to buy from this level, but if we are buying from this current market price, our stop loss will be at this level. If you are okay with the risk, if you are comfortable with the risk, which is about 100 and something pips, you can execute a buy. Like I said, you can go in with small lot size until a candlestick closes above this level, then you can add more lot sizes to that trade. So this is where to be confirmed that we have more buyers in the market above this level to confirm strong bullish momentum. Okay, so if you want to sell below this level. But for me, if a candlestick closes below this support, I will consider it as a fake out. I will consider it as a fake out. Like I said, DXY, sometimes you need to look at DXY. Okay, if DXY is bullish, you expect USD to gain value. If DXY is bearish, you expect USD to lose value. At the moment, DXY, which is dollar index, is bearish. So we should expect bullish move on pairs that has USD as counter. Okay? I hope that is clear, Mr. Emmanuel. Mr. Emmanuel, I hope that is clear.
Yes, sir. Thank you, sir.
I would have loved to open a trading view so that we can view DXY. Sometimes it takes that trading view to open, so I wouldn't be able to do that tonight. Okay, now I would be creating a broadcast list. If you'd like to join the broadcast list, just send me a message on WhatsApp so that we'll add it to the broadcast list. Okay, most of the charts I post on my status. From next week, I might not be posting them on my status. I'll just post it.
You are breaking, sir. I didn't get your last statement, sir.
Can you hear me?
I can hear you now, sir. Come again with the last statement, sir. You said if I want to join the podcast, what do I do?
A broadcast list. I'm going to create a broadcast list. Most of the videos and charts that I post on my status, on my WhatsApp status, from next week, I'll start posting them on my broadcast list. Okay, I'll start posting them on my broadcast list. So if you want to join the list, like some videos are like 5-10 minutes, but most times you see that I just post 3 minutes or 2-minute video on my status. Okay, so if you want to be having access to the full videos, those 5-minute videos, 6-minute video, you need to join the broadcast list. So after this class, just send me a message on WhatsApp so that I will add you to the broadcast list. Okay. Any question? Any other question? Any other question?
Yeah, sir, there is a question.
Okay.
Okay, sir. Thank you, sir.
You're welcome, sir.
Good evening.
Evening, Chief Naya.
Yes. Please, my question is, you said if the
I'm supposed to be in another class. Okay, let me just take a question before I end this session. That class has started 9:30. Okay.
If an index is on bullish,
yes,
any pair that contain Euro USD
that has USD as counter. If DXY is bullish, that tells you that the dollar is strong. Okay, so if dollar is strong on pairs that have USD as the counter, you expect that pair to be bearish because the dollar is strong. But if DXY is bearish, it indicates that the value of dollar is weak. Okay, it indicates that the dollar is weak if DXY is bearish. So for pairs that has USD as counter, you would expect a bullish move on those pairs. Just give me a few minutes. Let me try and launch DXY. Let's see the trend on DXY. 2 minutes.